Welcome to Operating with Positive Impact, a brand new series of podcasts brought to you by PwC. My name is Anthony Nev, and throughout this series, I'll be your personal guide in shaping your organization into a sustainable business. Together, we will deep dive into the world of sustainability and its impact on a business world. In the legal episode, we discussed how regulations are paving the way forward to a more sustainable business future. The EU Green Deal, which is at the origin of many of these regulations, comes with a package of various grants and tax incentives to support companies in their transition. The EU is also looking to incentivize for a sustainable transition outside of its own territorial limits. Customs and international trades are very impacted by this. In this episode, we will be listening to Tom from the PwC Grants and Incentive team and Giovanni from the PwC Tax and International Trade team. They will be discussing the impact of the EU Green Deal on both grants and incentives and on customs and international trade. Let's dive into their conversation.
Hello everyone, and welcome to the 9th episode of our Operating with Positive Impact podcast. I'm Giovanni Gijsels, the partner leading our customs and international trade practice at PwC Belgium, and I'm joined by my colleague Tom.
Thank you very much, Giovanni. So I'm Tom Wallyn. I'm a tax director within PwC. I'm heading the incentives hub here over in Belgium, and I'm helping clients with helping them in funding their capex and transformations investments, also in the form of sustainability projects.
Okay. Tom, we just had elections, and that might be a great opportunity to look at the Green Deal, what it was intended for, where are we going, Could you explain a bit, it was published 2019, could you explain a bit what it's about, but also how it impacts your daily work?
Yeah, well, the Green Deal's main objective is to reshape EU environmental and climate policy. And it thereby wants to tackle the significant environmental and climate challenges we face today. A few initiatives that are taken. First, reducing greenhouse gas emissions. Secondly, the reducing of deforestation issues. And thirdly, promoting a more circular economy. Now, as such, it aims to be a global approach to ensure a sustainable future for Europe and its citizens. Mm-hmm. But it doesn't stop there. It also comes with additional costs for companies, with impacts on most supply chains of companies that operate in or throughout Europe. But it also comes with a lot of opportunities, and that is often forgotten when we talk about the EU Green Deal. Opportunities in the forms of grants and incentives to fund the sustainable investments that companies need to make nowadays.
Yeah. And I think you mentioned global approach, and I think that's also an important element of these regulations, where actually the Commission relies on what they call the Brussels effect. Basically, by putting these measures on international trade, you force companies that want to do business on the EU market to comply with the EU standards, and in this case, sustainability standards. So that might mean that you need to start assessing the carbon footprint of your product, or look into ESG sustainability in your supply chain. I think it's also important to understand that although these measures are new, they often rely on mechanisms that have been in place for quite some time. If you look at customs duties from my area of expertise, they have been around for a long time. Some say it's the oldest tax in the world. And customs duties, they can have a corrective effect. On the one hand, they're a source of income and in this case for the Commission. But also they can, for instance, protect the market. When we see that products are coming at a far too low price, there can be anti-dumping duties. When we don't have enough products available on our market, there could be tariff suspensions. And you also see that these duties are also part of the free trade negotiations that the EU is having, where basically in return for having access or duty-free access to the EU market, certain countries need to improve or comply with certain topics that the EU finds very important. And this could be combating corruption, could be social equality, but also increasingly a sustainable development agenda is part of these negotiations.
So in essence, Giovanni, this means that the Brussels effect means that global companies should align with EU Green Deal regulations and so on and so forth to currently still sell their products on the EU market.
Correct. And it's looking at a sort of domino effect. If you start in Europe and other companies and countries start to comply, that actually it becomes a greener standard worldwide, or you get a greener standard worldwide. It's a bit of a two-sided reasoning. On the one hand, we want to use our our power as a big market, and make sure that we can push for new regulations. At the same time, it's also a responsibility. We're a very big consumer, so we have a responsibility on making sure that what we consume is done in a correct way, basically, or produced in a correct way.
Okay. So now let's dive a bit deeper into the actual content of the EU Green Deal. The package, as we know it now, is built around three main pillars. The first of which is decarbonisation. And the goal here is clear. It is to make the EU the first net zero continent by 2050, with an immediate target of reducing greenhouse gas emissions by 55% by 2030. That's also why we call it the Fit for 55 package.
And I hear it can have a big financial impact for companies. So.
Of course, well, to meet emission reduction target, the package includes a variety of new green taxes, targeting, of course, fossil fuel consumption and carbon emission, but it also promotes a revision of what we call the EU emission trading system, the European carbon pricing scheme. We already know that since 2003, where it targeted a number of industries, such as the heavy industry and the power sector. But as of 2025 and following, the EU ETS will expand to various other sectors, like maritime transport, road transport, and heating. So it will become very important and applicable to a number of additional sectors.
Mm-hmm. And it doesn't stop there. As mentioned earlier, we export a bit our regulations, and one of the elements that is linked to that ETS or new legislation or piece of legislation out there is a carbon border adjustment mechanism, or CBAM, where actually we want to look at a carbon pricing adjustment mechanism for products that are being brought onto the market with a focus on high carbon intensity products. So although we are currently in a transition phase and companies mainly need to report on what they're importing, you already start to see that there is a big impact on the commodities that are in scope of this regulation, iron and steel, aluminum, fertilizer and cement, but also, for instance, hydrogen and electricity, two energy sources which will play a big role in the energy transition. Also important is that this legislation actually allows for easy expansion, where plastics and chemicals are likely next candidates. So it's something that could move up or down and increase in scope very rapidly. And basically, as an importer of the impacted products, you have a choice. Either you decarbonize your supply chain, or you face a significant rise in cost when you bring products onto the EU market. Now, the European Commission has really fought very hard and emphasizes on the fact that it should not be considered as a tax, although, other countries might disagree on that. But the overall ambition is really to make a level playing field so that the companies in the EU can look into decarbonization while remaining competitive. If our markets are flooded with products at a low price, but with a high level of pollution, we basically lose two times. And it's with this consideration that you can even find in the legislation itself. The ultimate goal is to make it obsolete as the global standards basically catch up with it and make sure we don't need a CBAM regulation on our own.
Okay, that's very insightful, Giovanni. Thank you for that. But I also read in the text that the ambition of the EU Green Deal extends beyond reducing greenhouse gas emissions. Namely, the second pillar really focuses on circular production, circular economy, and what have you, systems that try to safeguard the environment, human rights, etc. Can you say a bit more on that?
No. Well, first I would say that already a lot of countries already have some schemes looking into incentivizing circularity in the circular economy, looking into water savings, for instance, but you can think of recycling schemes for things like plastic and glass bottles. And that recycling business is seen as crucial for sustainability by the European Commission. And that's also why they're putting a lot of incentives there. And maybe bringing it back to you, Tom, on these incentives, what do you see that is out there for companies to look into?
Well, first of all, on the tax side of things, so not at the incentive side of things, we have a number of plastic taxes that come up. Like, for instance, UK, like, for instance, Spain. Now, while the rates of these taxes are currently still low, the admin burden and compliance costs can already be very high for companies engaging with those territories.
So it goes beyond pure tax considerations.
But indeed, it goes beyond pure tax considerations. Under the EU Green Deal, also significant emphasis is placed on what we call extended producer responsibility, EPR. We see that a number of regulations, such as the packaging and packaging waste regulation, the battery regulation, impose various stringent waste management obligations on producers and importers of those goods. So it is clear that impacted companies will be financially responsible for the end of life of products that they place on the market. Now, I would say time to move on to another crucial area, customs. You already talked a bit about it, but I've heard that a number of important developments are there that will heavily impact most companies' supply chains when they are dealing with EU.
No,
is that correct?
That's absolutely correct. And there's a trend in, well, customs has always been important in view of enforcing certain controls at the border. In the past, the fiscal aspect of that was very important, mainly the customs duties, where you do see that the past few years, there's an increasing focus on non-fiscal measures that are being checked basically by customs, both on the import and the export side. And it makes sense. It's basically when goods cross a border that these regulations come into play, and customs could ask questions on the compliance. Are you aware of what you're importing? Do you know what you're importing? And are these products in compliance with our standards? One of the new kids on the block in that sense is the EU deforestation regulation, which will basically come into force the 1st of January next year. EUDR in short, where actually companies importing a number of basic commodities and some derivatives of these products, they should know if they are coming from deforestation. The products covered are soy, beef, palm oil, cacao, wood, and rubber. So it can go very broad, certainly on rubber. It also includes all rubber components that you could think of. And basically, when you're importing, companies should be able to demonstrate the piece of rubber that I'm importing is deforestation free, and also is in compliance with the regulations of the country of production. And that's also, for instance, where the human rights aspect comes into play. The regulations of those countries include social rights and for instance, combats against forced labor.
But as a tax professional, this is all very clear to me, but I can imagine for companies that they ask themselves, okay, but how can we put this in practice? How can we demonstrate that we are compliant?
No. Well, for EUDR, it goes quite far. So overall, I think companies need to have a due diligence system in place that is able to cover every single import or export or placing onto the market of the listed products. For EUDR, it really goes down to the geolocation of the farm where, for instance, the tree has been growing. So you need to have that information, and that basically also needs to be transformed in a due diligence statement that needs to be published. And the further actors in the supply chain, they can make use of that information, but also need to do their homework. They need to check, can I trust this information? Do I need additional information? Actually build upon that.
Wow, with such a multitude of policies and new regulations, how could a company discover and, moreover, be aware of what is impacting them?
Yeah. Well, to start with, I think companies really need to realize that these measures are taken seriously. Non-compliance with EUDR can lead to goods blocked at the border or even confiscated, as well as significant monetary fines. So for EUDR, they are set to go up to 4% of your EU-wide revenues, for instance. So that's a significant amount. Now, we also need to appreciate and understand that these new regulations come at a fast pace and also require big changes. But we have seen with CBAM, which entered into force quite recently, but also with the current position on EUDR, that the Commission is not really looking into postponement or anything. At best, authorities will be lenient in the initial phases for companies where they see, okay, they put a best effort, they do the best of their abilities, they have tried to comply. They don't exactly meet the standards, but actually you need to look into that. Now, coming to your question on how companies can know if they're impacted, for the regulations that I refer to, CBAM and EUDR, practical starting point is usually the customs data. In this data, you will be able to see what you're importing, you're exporting, and the codes that you see in there linked to your products are actually the codes listed in these new regulations, so that you can map quite easily. That also means that collecting and ownership of that trade data, that customs data, is very important. That's why we see that customs teams are increasingly involved in these new regulations. But the question is, do these teams actually exist? And that is often the challenge. A lot of companies don't have ownership over that data and have outsourced their customs activities to brokers. And with these new regulations, but also global tensions, protectionism on the rise, and so on, we see that more and more companies actually move towards a centralized customs governance model, including technical or technological capabilities to keep their information, but also analyze the information to see where are we impacted, but also make sure they can do the necessary reportings and so on.
Can you elaborate a bit on that further, Giovanni? What could be the consequences of non-compliance?
Yeah, well, as I mentioned, there would be significant fines, potentially goods being blocked. I think you also need to look into what your other actors in the supply chain can do. Can your suppliers deliver the information? That's a question. In some cases, do they want to deliver the information? And we see that there's currently already a bit of a battle on what they do want to share in view of confidentiality. But also some consider, okay, is the EU market something we still want to go for? But it's really monetary fines that could play a role, and goods being blocked, supply chain disruptions, which sometimes are very often to quantify.
Okay, but I think it's also important to note that the Green Deal challenges are not limited to the compliance cost for importers, but that they also could extend to EU-based businesses and manufacturers. And for instance, one of the primary consequences of the Fit for 55 package, and in particular the EU ETS revision, is the steep increase of what we call the so-called hidden cost of carbon. These are basically the costs that are embedded in the price of goods as a result of carbon taxes. For example...
Yeah, indeed. Could you give an example?
Yeah, thank you. For example, one of my clients is active in the logistics sector. He has a truck fleet that hasn't yet been electrified. So that means that, based on our calculations, the cost of fuel will increase by 25 to 30% in the future. Now, of course, these costs will be on-charged. These additional costs will be on-charged to the customers, creating a ripple effect throughout various supply chains. And that is what we call the hidden cost of carbon. So it is clear that first movers, for instance, in terms of electrifying, will already have a very big advantage there.
Mm-hmm. And then, what you said in view of the impact and the ripple effect, I think that amplifies also what I mentioned on companies, needing to adapt and know in their supply chain and maybe looking into complete new ways of working and systems to be able to have all the data. Did the EU and the EU Commission consider this? Is there financial support for companies in this transition?
Absolutely, Giovanni, and that's where the third pillar of the EU Green Deal kicks in, ensuring that no person and no place is left behind. To ensure the transition to a greener industry, the European Union has heavily invested in new funds to award grants and incentives that really promote innovation and sustainability. Needless to say that this financial support, if we want to compete with EU and with US, China and so on, is crucial for ensuring that the climate transition benefits all regions and sectors. Additionally, and this is another obligation but can be also an inspiring element in what is to be done next, companies need to map their environmental impact through the double materiality assessment of CSRD. And this will give companies a clear view of the impact of the Green Deal and which areas will be most impacted by the Green Deal.
And what can they do if you see these challenges, these impacts, what can companies do there, or can you give some examples?
Sure. What we see now is that already a lot of companies intend or are already making sustainable investments. For instance, we have recently advised an international recycling company that has made a number of investments throughout the world, Europe, US, and we have assisted them in obtaining local grants, but also US grants and European grants. So yeah, it's very important that we make aware that those incentives are available and that companies make use of these.
Yeah, I think that's indeed important, these examples. And talking to companies in practice, I noticed that actually a lot of people within the companies, but companies itself, they actually believe in the goals and the measures coming out of the Green Deal. At the same time, while often trying to protect the EU companies, we do see that we push them into further compliance, additional costs that might come on top. And in that sense, I have high hopes for the Green Deal industrial plan. With the re-election of Ursula von der Leyen, it was a bit of a question if the Green Deal would continue on the path it was on. Now it's confirmed that we will keep the Green Deal on the agenda, but also with the clear remark that the next phase will be about implementing rather than adding new legislation, but also investment. They said it will be an investment commission. And I hope these investments can really help our companies and industries to make leaps basically and get competitive advantage rather than more compliance and costs. And there's an old example that I would like to share from the car industry. And they say that if a European car has like a 2 or 3 liter engine, it's considered as a very big engine. In the US, that's still a small car. And they say that actually the difference in efficiency of these engines exactly matches the difference in taxes. So higher taxes in the EU have led to higher efficiency of the engines. And I think that's a bit the message we need to give. Yes, these regulations coming out of the Green Deal are coming at a high pace, creating a lot of questions, changes and liabilities for companies. At the same time, they align with clear environmental goals. They align with what consumers are demanding. And I truly believe if we play this correctly and use the investments wisely, this offers a possibility to make our industry and economy basically ready for the next decades. I don't know how you see that, Tom, but
I fully agree on that, Giovanni, and I think we can be very chauvinistic about the EU Green Deal. As you mentioned, it indeed offers a number of additional compliance formalities, a number of additional costs, but what we tend to forget is that it also offers numerous possibilities in the form of incentives, grants, tax incentives that are available to support companies, to even support European citizens, to keep up with the goals of the European Green Deal. And I think if we all do our best to keep this into account, that we only will go for a more sustainable and greener Europe.
No, thank you, Tom. I think this brings us to the end of our podcast. Thank everyone for listening, and I'll talk to you soon.